The American economy really doesn't have a cold, does it? I mean, the fact is, my theme this morning, and this is before all this horrific news, it's a resilient economy.
It absolutely is a resilient economy that experiences one of the longest recoveries in history, and there's no sign that it is going to end anytime soon.
I mean, you look at this, there's no sign it's going to end anytime soon. What a battle over the weekend on the philosophy, the theology of should the Fed raise rates, should they not? Parse where that debate is right now. I think there's a lot of confusion about the why of raising rates. Why raise rates now?
Because the U.S. economy is in a state where it does not need these ultra-accommodative monetary policy anymore. I mean, we must not forget, the Fed has been, we take a couple of steps back now, a couple of years back, when the Fed and other central banks around the world initiated these almost unprecedented monetary policy easing, and they have not really stepped back a lot from this. But over the past several years, much has changed, right? I mean, the unemployment rate is now close to 4%. We have, as I said, now more than 8 years of economic growth, and yet, if you look at the Fed's balance sheet and the Fed's interest rate, it looks like nothing has happened. So I think the Fed is right in just gradually, very gradually, normalizing the policy stance.
Right. So this is actually, Harm, what we hear more and more, right? That if you want to normalize, then you look at financial stability and not inflation. Is that the correct way of looking at things?
I think financial stability or financial conditions is important because that's the transmission between monetary policy and the real economy. And we see actually, despite of these couple of or these few interest rate hikes that we have seen from the Fed, financial conditions are almost easier than ever. So that it is important. We cannot, of course, not completely dismiss inflation. I mean, Chair Yellen has given this very interesting, elaborate speech several days ago, where she was going through all the issues that we have with inflation. And I mean, one of the big questions is inflation still giving us the correct signal? Because ultimately, I mean, we were looking at the Fed wants to set monetary policy in a way that it is right for the stance of the economy. Because we all know we cannot observe the slack in the economy directly, we thought we look at inflation as an indicator of how tight the labor market is and all that stuff. Now, maybe that link is somewhat broken. We got to reevaluate what the correct inflation rate is. But I mean, looking back, this core PCE deflator that the Fed has now determined to be its favorite inflation gauge, it is much lower than the core CPI that Greenspan and initially also Mr. Bernanke have been looking at. So implicitly, the Fed has actually increased its inflation target over the last several years when there are signs that the trend inflation rate has come down.